Hello there, I'm Windermere Real Estate's Chief Economist, Matthew Gardner, and this month we're going to take a look at the latest SCE housing survey. This gives us a really detailed look at consumer psyche in regards to the housing market. You see, I've always been fascinated by surveys as they frequently give me insights that I just simply don't get from looking at raw data. And, as luck would have it, the New York Fed just released its 2023 Consumer Expectations Housing Survey. Now, this particular survey has always given me some great and often surprising insights as to how the US population views the overall housing market. We certainly don't have time to cover all the questions that the survey poses. There was one section I wanted to share with you because it really resonated with me, and it relates to mortgage rates. The first question asked was where they expected mortgage rates to be 1 year from now. And as you see here, on average, households expected rates to rise all the way up to 8.4%. Now, although some may see this as extreme, well, you can note that in the 2022 survey, respondents predicted rates would hit 6.7%. And that's almost exactly where they were at the beginning of this March. And when asked where they thought rates would be 3 years from now, again, on average, households expected to see them climb to 8.8%. Now that's a rate we haven't seen since early 1995. I'm not sure about you, but I was very surprised by these results as they counter just about every analyst's expectation regarding where rates will be over the next few years. In fact, myself and every economist I know believes that rates will slowly pull back as we move through this year. I haven't seen a single forecast suggesting mortgage rates will rise to a level this country hasn't seen in decades. But as they say, the devil is in the details. And when I dug deeper into the numbers, well, it became very clear to me that demographics played a pretty big part in guiding people's answers. Let me explain. Here, the data is broken down by educational achievement. And you can see the survey respondents who didn't have a college degree thought that mortgage rates would rise to 9.4% within a year. But college graduates were far more optimistic, and they expected rates to be in the high sixes. And when asked to look 3 years out, respondents without degrees expected rates to break above 10%, while college graduates saw them pulling back a little from their 1 year expectations of 6.7% down to 6.4%. Now, we're going to look at the survey results broken down by housing tenure. And here you see that renters, well, they expected rates to be at almost 11% within 1 year. And homeowners, they saw them rising, but only up to 7.3%. And over the next 3 years, renters expected rates to break above 12%. That's a level we haven't seen since the fall of 1985. But homeowners, well, they expected to see them at a somewhere more modest 7.4%. So, what does this tell us? I see two things. Firstly, the rapid increase in mortgage rates that we all saw starting in early 2022 has a lot of people believing they will see rates continuing to rise, sometimes at a very fast pace over the next few years. I mean, if it's happened before, why can't it happen again? And this mindset leads me to my second point, which is that it's very clear that a lot of would-be home buyers just don't understand how mortgage rates are calculated. The bottom line here is that I see a potential buyer pool out there that needs educating, and that can give an opportunity to brokers to discuss how rates are set and where the market is expecting to see them going forward. And this may alleviate the concerns that many households have who might be thinking that they will never be able to afford to buy a home because of where they expect borrowing costs to be in the future. Education's everything, don't you agree? As always, I'd love to get your thoughts on this topic, so please comment below. Until next month, take care, and I'll see you all again soon. Bye now.